If you're a sociopath or a psychopath and you're running a big country and you've screwed up the finances of that country to the point where the system is ready to collapse, one of the things you might try is to foment civil unrest so that when the financial crisis comes, things get really crazy. People are out in the streets because they're already primed for it. And then you step in and declare martial law and put the Constitution aside. It wouldn't surprise me at all if that was part of a plan that is now being implemented in the US, because that kind of a scenario fits with pretty much all that our leaders are doing.
You're watching Silver News Daily. Subscribe for more. Imagine silver reaching $450 per ounce amidst economic chaos. Sounds unbelievable? John Rubino, a renowned economic analyst, predicts exactly that. With inflation spiraling, national debt skyrocketing, and geopolitical tensions rising, the financial landscape is primed for drastic changes. In today's video, we'll uncover the key factors driving this bold prediction and explore how you can potentially benefit from this unprecedented surge in silver prices. Stay tuned, because you won't want to miss this.
Commodities they could buy with that currency. And you reach a point where it dawns on everybody that we're literally running out of this stuff. Which is another way of saying we've got tons of currency relative to the amount of commodities that there are out there. And we really need to convert all the currency that we have into these commodities if it's at all possible. And so that, within the framework of the crack up boom, that means the price of real things goes through the roof, but not because there's a huge increase in the supply of currency. It's not inflation as we typically envision it. It's a loss of faith in the amount of currency or the currency that exists now. And so nobody just wants to hold those currencies anymore. So that's a conceptual difference that works out to the same thing, which is that the price of real stuff goes through the roof. And the market value of financial things like government bonds and bank stocks and, Goldman Sachs equities and things like that tank. And you get a revaluation in both directions where commodities relative to the size of the global economy, they go up, while financial assets relative to the size of the economy go way back down. There's a cycle in the gold market where the S&P 500 and gold's market cap fluctuate against each other. And sometimes they're trading at 1-to-1, and other times they're trading at this massive premium of the S&P 500 over gold. And lately we've been in a situation where the S&P 500 was vastly more valuable than the market cap of gold, but we're heading back in the other direction now. And if we go back the way previous cycles have gone to 1-to-1, then that takes the price of gold to $15,000 or $20,000 an ounce. So that's one metric that you can look at that's fundamental, that gives you a reasonable way of estimating the value of gold. And it could easily do that because it's done that a couple of times in modern history already. So it's not unprecedented. It's just something that happens when the cycle swings all the way to the other side. And it wouldn't be a surprise at all to see that happen again this time, because all the other numbers are so far out of whack that we should expect the pendulum to be swinging really wild.
John Rubino, a well-respected figure of the world of finance, has built a reputation for his insightful analysis and bold predictions. As the author of several books on economics and the founder of the popular financial website, dollarcollops.com, Rubino's insights are widely followed by investors and analysts alike. With decades of experience analyzing market trends and economic policies, his predictions carry significant weight. Today, we delve into Rubino's latest forecast that silver could soar to $450 per ounce amidst the current economic turmoil. But who exactly is John Rubino, and why should we pay attention to his predictions? Rubino's background includes a robust career in financial journalism and investment analysis. His books, such as The Money Bubble and Clean Money, highlight his deep understanding of monetary policies and their impact on global economies. His expertise has earned him appearances on numerous financial news outlets, where he discusses everything from precious metals to economic crises. Rubino's ability to connect complex economic concepts with practical investment advice makes his perspectives invaluable for anyone looking to navigate today's volatile markets. So why does John Rubino believe silver will hit $450? Let's break down the economic factors and historical precedents that support his bold prediction.
Yeah, gold and silver finally had some nice moves, and it's finally starting to pull the mining equities along for the ride. So suddenly it's a fun market to be in. But yeah, the best bull markets still have brutal corrections in them. So what we're seeing right now is to be expected after the nice run. Silver went from the low 20s to the low 30s. That's a good run by any standard. And for it to be correcting from there, because when something goes up by a third, it creates a lot of people with profits to protect. And so the normal way to respond to that is to sell some small amount of your position. And that pushes prices down and brings in other people who wish they'd sold at the very top, but now don't want to be left out. And so you get a correction. And that's probably all that's happening with precious metals right now, because it does feel like we're in a legit commodities bull market, which means buy the dip in not just gold and silver, but uranium and copper and many other things. But at the same time, the economy is due for a recession, and we're seeing a lot of not really headline numbers yet, but under the surface numbers that are pointing towards a slowdown. And with stocks being wildly overvalued and most of the financial sectors of the world being overleveraged right now, a recession is a dangerous thing. So we need to be paying attention to that too, because that would affect precious metals if we tip into an equities bear market and that creates a generalized recession. Then we could have another 2008 or 2020 when stocks tanked and it pulled precious metals down along for the ride. In both cases, they bounced off of that bottom. We had a really nice V bottom where they just took off because the Fed stepped in and started easing. So that whole thing could repeat. And that would be bad in the short run for precious metals and phenomenally good in the long run. So the takeaway there is don't give in to fear of missing out in markets like this. Don't just jump right in all at once, because you might be doing it right before a big correction. So keep buying, but do it in a dollar cost averaging way or with low ball bids or whatever. Or if you're in the stock market, write put options as a way of getting stocks at a discount. And do keep buying, but don't buy in a really aggressive way that puts you at risk of a sudden correction.
The current economic climate is fraught with challenges that are fueling uncertainty and driving investors towards safe haven assets like silver. Let's delve into the key issues shaping this environment and understand why they are critical in John Rubino's prediction. Inflation. One of the most pressing concerns today is inflation. Over the past year, inflation rates have surged to levels not seen in decades. Prices for essential goods and services have been climbing steadily, eroding purchasing power and creating economic strain for consumers and businesses alike. The Federal Reserve's efforts to curb inflation through interest rate hikes have yet to show significant results, adding to the uncertainty. Debt levels. The United States is facing an unprecedented level of national debt, which has now surpassed $30 trillion. This debt burden has significant implications for the economy. As interest rates rise, the cost of servicing this debt increases, consuming a larger portion of the federal budget. This scenario limits the government's ability to invest in other critical areas and heightens the risk of fiscal instability. Geopolitical tensions. On the global stage, geopolitical tensions are escalating. Conflicts in regions such as Eastern Europe and the Middle East, as well as strained relations between major powers like the US and China, are contributing to a volatile international environment. These tensions can disrupt global trade and supply chains, further exacerbating economic uncertainties. Monetary policy. The Federal Reserve's monetary policy is a double-edged sword in the current climate. On one hand, raising interest rates is necessary to combat inflation. On the other, it risks slowing down economic growth and potentially leading to a recession. The delicate balance the Fed must maintain adds another layer of complexity to the economic outlook. Market volatility. Financial markets have been highly volatile, reflecting the broader economic uncertainties. Stock market fluctuations, driven by inflation fears, interest rate hikes, and geopolitical events, have led investors to seek more stable investment options. Silver, known for its stability and intrinsic value, becomes an attractive choice in such times. Supply chain issues. The global supply chain has been under severe strain, a situation exacerbated by the COVID-19 pandemic. These disruptions have led to shortages and increased costs for many goods, contributing to higher inflation and economic instability. In summary, the current economic climate is characterized by high inflation, rising debt levels, geopolitical tensions, uncertain monetary policies, market volatility, and supply chain disruptions. These factors collectively create a scenario where investors are increasingly turning to silver as a safe haven asset. Understanding this
what we're
context
seeing
is
is happening
crucial to
for
grasping why
different
John Rubino
specific
predicts that
reasons
silver
in different
prices could soar to
sectors of the commodity
$450 per
space.
ounce.
But it all amounts to the same thing. People are converting their currency into real stuff. And, silver, which you mentioned, is a great part of that story because it has basically two things going for it. One is that industrial applications are growing for silver, and the demand for silver in solar panels and satellites and electric cars, and it goes on, is rising at an accelerating rate. And right now, silver is in deficit, meaning that the world's silver mines aren't producing enough silver to cover what industrial users and investors are demanding right now. So we're running through the above ground stocks of silver. And when that runs out, then you go from deficit to shortage, which usually means prices have to go up to increase the supply somehow. And an analyst just came out lately with a time frame for that, and he said 1.5 to 2 years before we run out of above ground silver, and the price mechanism has to really kick in order to allocate what there is out there. And India, for instance, is a good example of the response to that because they just imported more silver in the first quarter of this year than in all of 2023. And they're normally a big importer of silver, so that we're talking serious numbers in that case. And they, at the same time, repatriated 100 tons of gold from London back to India. So take what India is doing and kind of spread it out around the world, and you've got different entities, whether they're countries or companies or individuals, doing variations of that. They're buying silver coins, or they're stockpiling gold because they see a currency crisis coming, or they're buying every bit of copper they can get their hands on, because if we're going to electrify the world, it's going to take 3 times as much copper as comes out of today's copper mines. And then what are we going to do then? And so everybody has their reasons, but it all involves a thought process in which they conclude that the currency that they have is worth less than the commodity.
To understand why John Rubino's prediction of silver reaching $450 per ounce might not be as far-fetched as it sounds, we need to look back at historical precedents. The history of silver prices is marked by significant spikes during periods of economic uncertainty and financial crisis. One of the most notable instances occurred in the late 1970s and early 1980s. During this period, rampant inflation and geopolitical instability, including the Iranian Revolution and the Soviet invasion of Afghanistan, led to a flight to safe haven assets. Silver prices skyrocketed from around $5 per ounce in 1978 to nearly $50 per ounce in January 1980. This dramatic rise was driven by investors seeking protection against the devaluation of fiat currencies and the economic turmoil of the time. More recently, the 2008 financial crisis triggered another surge in silver prices. As the global economy reeled from the collapse of Lehman Brothers and the ensuing market panic, investors once again turned to precious metals. Silver prices rose from about $10 per ounce in late 2008 to nearly $50 per ounce by April 2011. The factors at play included massive monetary easing by central banks, a sharp increase in debt levels, and a loss of confidence in traditional financial systems. These historical episodes underscore a critical point. Silver tends to perform exceptionally well during periods of high inflation, economic distress, and geopolitical tension. The current economic environment, marked by record levels of debt, persistent inflation, and increasing geopolitical risks, shares many similarities with these past crises. This sets the stage for a potential repeat of history, where silver prices could see a substantial rise as investors seek safety and stability. By examining these historical precedents, we gain a clearer picture of why John Rubino's prediction is grounded in a well-established pattern. The lessons of the past suggest that in times of economic upheaval, silver's appeal as a store of value and a hedge against uncertainty becomes particularly pronounced, making significant price increases not just possible, the probable.
Basically, they're lying to us about our tax rate because they're stealing from us in a way that doesn't show up in the official marginal tax rate. And they got away with that until very recently by not including things like stocks, bonds, and real estate, which go way up in inflationary times, in the consumer price index. So they could say, oh, look, your inflation is only 2% a year. Meanwhile, house prices were going up 8% a year, stocks were going up 15% a year. Bonds were rocking too. We had this massive long bond bull market that just ended lately. And that allowed the government to lie by omission, basically, and it also enriched the already rich at the same time. So it served two purposes. One is that it made the guys financing political campaigns even richer and really happy because of that, and more likely to continue to funnel money into the political system. And it hid the damage that was being done from people. And so the people who were being hurt by this process didn't really have anything to say about it because they didn't know what was going on. Just lately, though, inflation started to spread from financial assets to the assets that are measured in the consumer price index. All of a sudden, food went way up and car prices went through the roof and rents went just crazy lately, and along with college tuition and medical bills and all the stuff that form part of the cost of living for most people. And so that changed everything. In 2022, we had like 8.75% official inflation and probably 15 or so percent real inflation in the cost of living, in the CPI. And so now, the whole country is freaked out by this because so many people who were just covering when their cost of living was what it was in 2019 have seen that cost of living go up by 30 or so percent, and now they can't pay all their bills. And so you have this spectacle of politicians and economists going on CNBC or MSNBC and saying, people are just so ignorant. They don't understand how good they've got it now because inflation is back down to 3%. And the unemployment rate is this awesome low 3.5% or 4% number. And this is great. This is a really happy economy. But they're saying it to a country full of people who had their cost of living raised by a third and who can't pay for the rent and to put gas in the car and to feed their kids all at once. They have to choose which one of those things they're not going to do. So they're not happy. And so that
monetary policy, primarily orchestrated by the Federal Reserve, plays a crucial role in influencing the prices of precious metals like silver. Understanding how these policies impact the economy can shed light on why John Rubino predicts a significant rise in silver prices. The Federal Reserve, often referred to simply as the Fed, uses monetary policy to control the money supply and interest rates. These tools are employed to either stimulate economic growth or curb inflation. During times of economic downturn, the Fed typically implements an expansionary monetary policy, which involves lowering interest rates and increasing the money supply. This was evident during the 2008 financial crisis when the Fed slashed interest rates to near zero and initiated quantitative easing programs, pumping trillions of dollars into the economy. Conversely, to combat high inflation, the Fed adopts a contractionary monetary policy, raising interest rates and reducing the money supply. This tightening of monetary policy tends to strengthen the U.S. dollar, making it more attractive to investors and leading to lower prices for commodities, including silver, as they are priced in dollars. However, the current economic scenario presents a unique challenge. While the Fed has been increasing interest rates to tackle inflation, the effectiveness of these measures is being questioned. Persistent inflation and high levels of debt are complicating the economic landscape. Despite the rate hikes, inflation remains above the Fed's target, and the cost of servicing the national debt continues to rise. Higher interest rates increase the cost of borrowing, which can slow down economic growth. This scenario creates a precarious balance for the Fed. If they continue to raise rates, it could lead to a severe economic slowdown or even a recession. On the other hand, if they halt rate hikes or reduce rates too soon, inflation could spiral out of control. This tightrope walk by the Fed is causing uncertainty in the markets, making safe haven assets like silver more attractive. Historically, during periods of monetary policy uncertainty, precious metals have performed well as investors seek stability. The current environment of high inflation, significant debt, and geopolitical tensions is reminiscent of past periods when silver saw substantial price increases. John Rubino's prediction of silver reaching $450 per ounce is grounded in this understanding of monetary policy dynamics. As the Fed navigates these challenging waters, the conditions are ripe for a surge in silver prices, driven by investor demand for a reliable store of value amidst economic volatility.
The nice thing about prepping is that no matter why you do it, probably a lot of what you're doing applies to any kind of a crisis, right? Because a lot of the hurricane stuff you're doing will work more or less for civil unrest for you. You're putting in place kind of an informal structure of people who have some authority when things get tough, and you know who they are, they know who you are, and you're taking steps to make yourself reasonably well prepared for it. And that'll work in a financial crisis, that'll work in civil unrest, that'll work for a natural disaster. So you don't have to do prepping for every single thing that could happen. You just need to do general prepping. Now, about the whole political civil unrest thing, we could spend the entire show just talking about how crazy our politics have gotten lately. And let me say a couple of things. One is that if you're a sociopath or a psychopath and you're running a big country and you've screwed up the finances of that country to the point where the system is ready to collapse, one of the things you might try is to foment civil unrest so that when the financial crisis comes, things get really crazy. People are out in the streets because they're already primed for it. And then you step in and declare martial law and put the Constitution aside, and you don't have to take the blame for that financial crisis that you caused, because there's nobody to blame you, because you've taken control of all the media outlets, and you got the military on the streets and stuff like that. You've declared martial law, and it wouldn't surprise me at all if that was part of a plan that is now being implemented in the U.S., because that kind of a scenario fits with pretty much all that our leaders are doing right now. So we could easily see civil unrest that isn't even organic, that doesn't spring up independently, that is organized from the top down as a pretext for that authoritarian government that they're looking at setting up. Now, the second thing is that our politics are such a mess right now, in large part because we've been running elections that are inherently untrustworthy. You know, when you're using voting machines that don't leave a paper trail and can be hacked and are connected to the internet, of course, nobody's going to trust the results of things like that.
One of the most pressing concerns in the current economic landscape is the unprecedented level of debt and persistent budget deficits. These issues are critical factors in John Rubino's prediction that silver could reach $450 per ounce. The United States is grappling with a national debt that has surpassed $30 trillion, a figure that continues to grow due to ongoing budget deficits. Since 2020, annual deficits have exceeded $1 trillion, driven by extensive government spending on pandemic relief, infrastructure, and other programs. This fiscal imbalance means the government is consistently spending more than it collects in revenue, necessitating further borrowing and adding to the national debt. High debt levels have significant implications for the economy. One immediate effect is the increasing cost of servicing this debt. As interest rates rise, so does the interest expense on the debt, consuming a larger portion of the federal budget. This reduces the funds available for other essential services and investments, potentially leading to cuts in critical areas such as healthcare, education, and infrastructure. Moreover, high levels of debt can undermine confidence in a country's fiscal health. Investors may begin to question the government's ability to manage its finances, leading to a loss of confidence in the currency and, by extension, in traditional financial assets. This scenario can drive investors towards safe haven assets like silver, which are perceived as more stable stores of value during times of fiscal uncertainty. Historically, periods of high debt and deficits have been accompanied by increases in the prices of precious metals. For instance, during the late 1970s and early 1980s, the U.S. faced high inflation and rising debt, conditions that led to a significant rise in silver prices. Similarly, in the aftermath of the 2008 financial crisis, massive government spending and monetary easing measures drove investors to seek refuge in gold and silver, resulting in substantial price increases. The current economic environment mirrors these past crises in many ways. Persistent budget deficits, high debt levels, and rising interest rates create a perfect storm for economic instability. This instability makes silver an attractive investment for those looking to protect their wealth. John Rubino's prediction is rooted in these fiscal realities. As the U.S. continues to struggle with its debt burden and budgetary challenges, the demand for silver is likely to increase. Investors seeking a hedge against fiscal irresponsibility and economic uncertainty will turn to silver, pushing its price toward the predicted $450 per ounce. This scenario underscores the importance of understanding the broader economic forces at play and how they impact investment decisions.
Having mail-in balloting, where all they do is, vaguely look at a signature and compare it to another signature and don't really think beyond that. Or when you have voting rolls that are full of dead people. Just the other day, there was a headline about some county in Arizona has voting rolls with more people on it than there are people in the county. So whoever loses elections in that kind of an environment feels like they got cheated, just because cheating is really easy to do. So they assume the other side did it. And we've got an election like that coming up where if it's a close election, whoever loses is going to assume it was stolen and they're going to hit the streets. So if it's not a landslide, what we really need is a landslide to avoid civil unrest here. And if it's not a landslide, if it's 50.2% versus 48.9% or something like that, then people are going to assume they lost because the other side cheated. And we are going to see serious civil unrest in a lot of places. And that's something we should be preparing for. That's not something we can prevent at this point, because none of us individually are in charge of these idiotic election systems that are being set up around the country. And none of us are in control of the lies that the media is telling or the things that the criminal justice system is doing right now. We can't control any of that. All we can do is go out and vote and hope our vote counts. But if it feels like it doesn't, then we're there. We're at that point that you were talking about where, we're on the verge of civil war. And that could be as soon as this coming November. And if it's not, then it could be as soon as we have the next election, because until we fix the underlying problems, we're always going to have a setup that is ripe for civil unrest. So anyhow, hopefully it's a landslide. One side wins by so much that the other couldn't possibly feel like they got cheated. And that's that, and then we have a peaceful transition. And we get on with making the financial mess that we've been making for such a long time and trying to start World War III. There are just so many things going on that if the election is not the cause of massive civil unrest, we'll forget about it in a heartbeat and move on to the other crises.
Inflation, the persistent increase in the price of goods and services, is another critical factor contributing to John Rubino's prediction that silver prices could surge to $450 per ounce. Understanding how inflation affects the economy and investor behavior is key to grasping why silver could become a preferred investment. Inflation erodes the purchasing power of money, meaning that each dollar buys less over time. This phenomenon is particularly concerning when inflation rates are high and sustained, as has been the case recently. The Consumer Price Index, CPI, a common measure of inflation, has shown significant increases, indicating that prices for everyday goods and services are rising rapidly. When inflation is high, traditional savings lose value because the real return on savings, adjusted for inflation, is negative. This environment pushes investors to seek assets that can preserve value and provide a hedge against inflation. Precious metals like silver are historically known for their ability to retain value in inflationary periods. One of the primary reasons silver is seen as a hedge against inflation is its intrinsic value. Unlike fiat currencies, which can be printed in unlimited quantities by central banks, silver's supply is limited. This scarcity, combined with its industrial and monetary uses, helps silver maintain its value over time. During inflationary periods, the price of silver tends to rise as investors flock to it as a safe haven. For example, in the 1970s, the U.S. experienced high inflation, reaching double digits by the end of the decade. During this time, silver prices increased dramatically, reflecting its role as a store of value. More recently, in the aftermath of the 2008 financial crisis, inflation fears and loose monetary policies drove silver prices from around $10 per ounce to nearly $50 per ounce by 2011. Currently, several factors are fueling inflation. These include supply chain disruptions, increased consumer demand, and expansive fiscal and monetary policies enacted in response to the COVID-19 pandemic. Central banks, including the Federal Reserve, have injected trillions of dollars into the economy through various stimulus measures, increasing the money supply significantly. While the Federal Reserve has raised interest rates to combat inflation, the effectiveness of these measures is still uncertain. Persistently high inflation can lead to a loss of confidence in fiat currencies, prompting investors to seek alternative stores of value, such as silver. John Rubino's prediction leverages these inflationary dynamics. As inflation continues to erode the value of money and create economic uncertainty, the demand for silver as a hedge is expected to grow. This increased demand, coupled with silver's limited supply, sets the stage for significant price increases. Investors looking to protect their wealth from inflation are likely to drive silver prices higher, potentially reaching the $450 per ounce mark as predicted.
There was always going to be a point in this process where the world's central banks just give up on trying to control inflation because the alternative is too brutal. In other words, if you raise interest rates high enough to actually choke off inflation, you bankrupt all the sectors of the financial world that require low interest rates to survive. And that gives you a 1930s-style deflationary depression, which nobody in charge is going to want to see on their watch. So at some point, they're going to give up and they're going to say, all right, we'll just accept higher inflation. What's interesting about the present day is that we're starting to hear voices calling from authority. And what that means is that it's becoming normalized, this idea that maybe we need to choose a 3 or 4% inflation rate going forward as a way of inflating away our debts to give us a chance to manage all the debt that we've taken on. And the idea being that if you keep the inflation rate above the interest rate, then the real cost of your debts goes down because you're paying off those debts at rapidly depreciating currencies. Now, this is crazy, but it's the kind of rationalization that people are going to come to at some point, and it looks like we're hearing the early voices in that process. The reason why this doesn't work, and it'll fail spectacularly, is that people respond to their expectations for inflation. So if you raise interest rate or raise inflation above the average interest rate, then what does the rational person do? They go out and borrow a bunch of money in order to take advantage of the fact that the dollar is falling fast enough to make that debt cheaper going forward. And so instead of inflating away your debts, you generate an increase in the amount of debt in the system and make your problems even worse. And that's kind of what we've done for the last 50 some years since the 1970s. And if we explicitly go for 4 or 5 or 6% inflation, we'll get that on steroids. And that's why that process will fail. So that's why modern monetary theory won't work. And that's why this idea of accepting a higher inflation rate won't work. But it looks like we're going to try it. So we'll get to find out if I'm right about it just absolutely not working and blowing up in our...
Geopolitical tensions are a significant factor influencing the price of silver, and they play a crucial role in John Rubino's prediction of silver reaching $450 per ounce. Understanding the impact of global political instability on markets can help explain why silver is poised for such a dramatic rise. Geopolitical tensions, such as conflicts, trade wars, and political instability, create uncertainty in global markets. Investors seeking safety in times of turmoil often turn to precious metals like silver, which are considered safe haven assets. This increased demand for silver can drive up its price. Historically, geopolitical events have had profound effects on the prices of precious metals. For instance, during the 1979 Iranian Revolution and the subsequent Iran-Iraq War, oil prices soared, leading to economic instability. Investors flocked to gold and silver as safe havens, causing their prices to surge. Silver prices, in particular, saw a dramatic increase, peaking at nearly $50 per ounce in 1980. More recently, the geopolitical landscape has been marked by significant events that have influenced silver prices. The trade tensions between the United States and China, for example, created economic uncertainty that led to increased demand for safe haven assets. Similarly, the ongoing conflict in Ukraine and the resulting economic sanctions against Russia have further destabilized global markets. In addition to direct conflicts, geopolitical tensions can lead to broader economic consequences, such as disruptions in global supply chains and trade. These disruptions can cause volatility in commodity prices, including silver. For example, the COVID-19 pandemic highlighted the fragility of global supply chains, leading to shortages and price spikes in various commodities. Geopolitical risks are not limited to physical conflicts or trade disputes. Political instability within countries can also affect investor confidence. For instance, political turmoil in major economies can lead to currency devaluation and inflation, prompting investors to seek the stability offered by precious metals. In the current geopolitical climate, several factors are contributing to market instability. The tension between major powers, such as the United States and China, ongoing conflicts in the Middle East, and political unrest in various parts of the world all create an environment of uncertainty. This uncertainty drives investors towards safe haven assets like silver. John Rubino's prediction of silver reaching $450 per ounce considers these geopolitical dynamics. As tensions continue to rise globally, the demand for silver as a secure investment is likely to increase. This heightened demand, coupled with the limited supply of silver, creates a scenario where significant price increases are plausible. In summary, geopolitical tensions add another layer of uncertainty to an already volatile economic environment. Investors, seeking to protect their wealth from the fallout of these tensions, are likely to turn to silver, driving its price higher. This aligns with Rubino's forecast, highlighting silver's potential to reach unprecedented levels as global instability persists.
Who gets into investing goes through a stage where they think they can call the market. They're right about a couple of things, and they think they can be right about everything from then on. And then the market teaches them a really humbling lesson. So what you don't want to do is learn that lesson with all your money all at once. If you learn it with just enough money to hurt, then that's good. That taught you a lesson you need to learn. But if you learn it with everything, then you go broke, and maybe you just never you never trust your own judgment again, and you never want to be involved in finance in any way. And by the way, Duncan, you kind of pointed out a really good lesson for life in general, not just markets, that whatever you're doing, you want to have some part of your plan being something that if things don't work out, you can use that one part of the plan as a way to make yourself feel better about what's happening. You need to be able to hang your hat on some kind of reason for optimism. And so, for instance, in stocks or buying physical precious metals, if you're dollar cost averaging and the price goes way down, then you can say, okay, then with my next buy, I'm going to get a lot more ounces. This is actually a good thing. So you have a reason for optimism, and that's psychologically really healthy. You don't ever want to make a bet that's so big that that there's nothing good to be said about a correction. You always want a correction to at least, or some other thing in the market that happens that's not ideal for you. You always want it to have an aspect that is positive, that you can focus on.
As we've explored, several key factors are converging to create a perfect storm for silver prices. John Rubino's prediction of silver reaching $450 per ounce is not just a bold statement. It is grounded in the current economic realities and historical precedents. First, the Federal Reserve's monetary policies are walking a tightrope between controlling inflation and preventing economic recession. High interest rates, coupled with massive national debt, are straining the financial system. The cost of servicing this debt is rising, further destabilizing the economy. Investors are increasingly seeking safe havens, and silver, with its intrinsic value, stands out as a prime choice. Second, persistent high inflation is eroding the purchasing power of fiat currencies. Traditional savings and investments are losing value in real terms, driving more investors to silver, which has historically maintained its value in inflationary times. Third, geopolitical tensions are adding layers of uncertainty to an already fragile economic landscape. Conflicts, trade wars, and political instability are making investors nervous about the future, pushing them towards the stability offered by precious metals. These factors, monetary policy challenges, high inflation, and geopolitical instability, are all contributing to a scenario where silver is likely to become a preferred investment. Historical patterns show that in times of economic distress and uncertainty, precious metals, particularly silver, see substantial price increases. John Rubino's prediction leverages these insights, suggesting that silver could realistically reach $450 per ounce. As investors seek to protect their wealth from inflation, debt burdens, and geopolitical risks, the demand for silver is set to rise sharply. The limited supply of silver further supports this potential price surge. In conclusion, the economic landscape is primed for a significant increase in silver prices. By understanding the interplay of these factors, investors can better position themselves to benefit from the upcoming surge. Stay informed, stay prepared, and consider how silver might fit into your investment strategy. Don't forget to
That's why
subscribe to our
our
channel for more
politics is
insights and
so
updates on this
unsettled
evolving
right now.
financial story.
Because of this,
And
you've got
remember,
this huge
this video
section
is
of
for
tens
informational
or
purposes
tens of
only
millions
and
of
not
people in the
financial
U.S.
advice.
who just can't get by in the current system, and they're being told by politicians and economists in the mainstream media to ignore what they're seeing and trust the experts. And so basically the last 10 years has been this process of the experts screwing up in one way or another, and different groups of people figuring it out and no longer trusting the experts. And now, after the pandemic and after the Iraq war, and it just goes on and on. And after the weaponization of the criminal justice system just lately for political aims. So various groups of people tune into various expert failures and then see that and then stop trusting the big systems out there. And pretty much now we're at a critical mass where virtually everybody has been fooled or lied to in a way that they understand. And so they no longer trust the system. So you're getting that thing you and I've talked about called the shrinking trust horizon, where we have come to the conclusion that whether it's the public health system or the military or the political system or the mainstream media or healthcare or whatever, they can't be trusted. So we only trust people we can see and look in the eye and shake hands with. And so we buy our food from local farmers, or we grow it in gardens at home, and we tune out the mainstream media. The combined viewership of CNN, Fox, and MSNBC is plunging. The Washington Post is laying off reporters now, and the New York Times has been laying off reporters forever. And Sports Illustrated magazine basically just closed down. The bloodbath in the media is ongoing and everywhere. And the reason for that is because they turned out to be untrustworthy. So once you get to the point where nothing is trustworthy, then why would anybody trust the money that is run by these experts who are part of the big systems out there? If we can't trust healthcare and we can't trust food and we can't trust politics, then there's no reason to trust money anymore. And that's the crack-up boom that the Austrian School of Economics talks about, where we just give up having faith in the currency because we know it's going to be inflated away at an accelerating rate going forward. And we just bail on financial assets. So this is something we've talked about a bunch of times in the past, but we've never been closer to that point than we are right now. So I think this is a fascinating time in economic history, and a terrifying time for anybody